It's been a mixed picture for the markets across the board. South Africa's all-share closed off last week in the red, but is still up 2.25% before today's trade for the year thus far. So things aren't faring too bad on that front. So some positivity there. It is around 0.5% lower this afternoon, and that will be of key consequence then moving into the rest of this week. Will it just be a case of profit taking and a slight sense of negativity coming through onto the market? Let's unpack exactly what those numbers look like, and we'll get into the gist of it in just a second. Great deal of negativity coming through there with the rand, even weakening ever so slightly, but we can't really complain, right? Nearly 13.40 against the US dollar. Gary Boyson, portfolio manager at Rand Swiss, now joining us from the JSE as we get that market picture. 0.5% down today, all red behind you. What do we attest that to? That's a big drop today.
So it's interesting. So as you mentioned, we're going into Chinese Lunar New Year. So we are getting perhaps a little bit of volume coming out of the market as well. We got a little bit of Chinese data out this morning, but it didn't seem to be too market moving. So yeah, what I probably attribute it to is perhaps people being a little bit more optimistic about what's happening in the US at the moment off that strong payrolls number that we got out on Friday.
Yeah, talking about that payrolls number, that comes out as at more than double the expectation. I think the expectation was around 174,000 jobs to be created. Instead, they create around 300,000 odd jobs in 1 month. Look, of course, we can only dream of such, but that itself should have been a positive twist to the numbers today.
So we did see the US markets ending a little bit firmer on Friday, and we actually saw it in the Asian markets that were open today, just a slight lift. But what this also does is it just sets up a picture where you've got a Fed that now has a definite dovish tilt. So we're suddenly seeing interest rates a little bit, perhaps a little bit more suppressed in the US, but at the same time we're seeing a very, very strong jobs number. So what that's kind of saying to me is that the potential for the Fed to now move towards potentially a more hawkish tone and maybe see interest rates lift a little bit more quickly than expected in the US is back on the table, and that should pull money out of the emerging markets. But yeah, it's a difficult read-through to say that. What is interesting to note, though, that if you look at the forward contracts on the local currency and certainly on local interest rates as well, they both seem to be pricing that for the first time we might actually be seeing an interest rate drop in South Africa by the end of the year. If we look back to October last year, it was absolutely clear that we were going to have probably flat interest rates, but potentially a hike. So we're seeing a reversal on that, which is, again, the local market seems to be assuming that that interest rates are going to be lower in the US for longer, but that jobs number at the end of the day just kind of calling that whole premise, that whole thesis at least into question.
Can I tell you though, Gary, that nothing you said there mattered except the fact that you said that interest rates might drop in South Africa, and I'm jumping for joy on that one. So, I mean, the South African rand will perhaps head a little weaker on that basis as well, because then, it doesn't necessarily make us as attractive as one would possibly hope. But if you take a look at the overall picture of South Africa's market, still up around 2% for the year. The basics are looking okay for now, even though it was, of course, from a low base as well.
No, so I think we're starting to really, I suppose, try and attract bargain hunters. So we got, obviously the announcement that some of the, overseas dignitaries and authorities actually, were in contact with the President Cyril Ramaphosa, just saying that they want to see some sort of, prosecutions around the corruption cases that we're currently seeing sort of dominating news headlines in South Africa, and that maybe also, sending a couple of jitters through our market. But overall, if you look look at in terms of earnings, what our companies are doing, our companies look very, very attractive at this stage. So another announcement got today, I'm sure we'll chat about it, is the Clover announcement. And this is really a market in which we're seeing foreigners, I think, looking at some of the companies here, seeing that in earnings terms these companies are very, very solid, but just investors not having the appetite to invest. And what you're seeing is these private equity consortiums coming into the market and buying up and delisting our companies because they're just going for a song. It's just for some reason private investors are not, or at least private retail investors and potentially some of our institutions are looking at the JSE and are I suppose, a little bit gun-shy.
So we're saying then that the local market could perhaps be at levels so low that they're good enough to buy the entire company. That's a bit fearful of the companies that are on board right now, right? And if you take a look at the construction firms, they're at risk here.
Absolutely. So construction is a sector, a sector almost that sits outside of what other sectors are doing. And I mean, it's very difficult to tell whether a company is presenting, enormous value at this level, given our kind of like the uncertainty around policy in South Africa, or whether it's going to be representing a value trap. I think with the construction companies, you can be a little bit more certain. So we've seen Group 5 under a lot of pressure recently, also making headlines today. But if you look at the construction sector, it sits almost outside of the other sectors in that it is very heavily dependent often on fiscal infrastructure programs. So with the pressure that our fiscus is under currently, we can't see a large infrastructure spending program being pushed through, which is often where these companies kind of get their boom times from.
Yeah, let's talk about Implats as well, coming out with their trading update. It seems to have been a much better day on the board for them as well today.
So they traded up initially, around 12% when I last checked their numbers. Sitting up around 10%. Now this is on the back of an update which came in a long way ahead of expectations, and it's not so much the production numbers. So the production numbers actually came in a little bit behind. So if you look at gross refined platinum, it was up. It looks like they're going to hit for the half year around 800,000 ounces, which is actually a little bit behind expectations. But sales also coming in a little bit low. I think that was at about 773,000 ounces, but the earnings forecast that far higher. Now part of this is being attributed to it's not when you talk about the PGM basket, it's not the platinum, it's the group metals that we're looking at. So it's the likes of the palladium, the rhodium, the other minerals that are mined with platinum, whose prices have been doing exceptionally well. That's helping to lift the earnings, especially at Impala. The likes of Amplats, I'm sure, are also going to be reporting better numbers too. So I think very, very, very positive result for Amplats, and the market, I think, justified in re-rating them, and I think we might see further upside from here.
Yeah, certainly going to be an interesting one, especially considering that we are having the mining in Durban happening right now. So fantastic stuff. Gary, appreciate your time this afternoon, but Gary Boyson, Portfolio Manager at Rand Swiss, unpacking that market picture for us. We'll come